Good afternoon and welcome to CanadianAgMarkets.com. We are finally back after a week pretty much of absence. We did some traveling last week and visited a lot of our customers, and it was an excellent week we had last week. We got to walk some fields, we got to have some coffee, and we got to visit with our clients in Alberta this last week. So it's good to be back. Good to be back home, and we're excited to get on with the week. Today is the I wouldn't say the only trading day this week, or we're going to have a bit of a choppy week as far as the number of trading days goes. Tomorrow we have Canada Day. We'll observe Canada Day. That means the canola markets are open, but US markets are continuing to stay open. Sorry, the canola market will be closed. US markets will continue to be open. But on Friday, we will have the US markets closed to observe the July 4th or Independence Day holiday. So let's get into what happened in markets today. All right, we had canola up $16.80 at 709.70. It was actually up considerably higher at some points during the day. We'll get into that in a little bit. We have Minneapolis wheat down 9 cents to 639. Kansas wheat down 7 to 526 and 3/4. Chicago wheat down 2.5 to 538 and a quarter. Soybeans were up 2 1/4 at 1027. They were also up larger. Pretty volatile day in soybeans, I would say, actually. Soybean oil up 14 points to 52.75. Corn up 3 to 420 and a half. Canadian dollar was down 28 hundredths at 73.38. Live cattle was up buck 12 a hundredweight at 213.87, and feeder cattle were up 277 a hundredweight at 310.675. So some good gains to be had there. All right, we're going to get into you know what I'm going to do today? I'm going to give you a sneak peek of what our one of our ad hoc reports look like. If you subscribe to our premium service, which is only $99 a month or less than $1,200 a year, and that's Canadian dollars, by the way, so no U.S. exchange. On that, it is designed with Canadian farmers in mind. So if you want to get all of our ad hoc, all of our weekly, all of our morning updates, and all of these videos delivered to your inbox, subscribe to our service. It's CanadianAgMarkets.com/subscribe. We'll put that in the description below. And here's a sneak peek of what we do offer. When big reports come out like the USDA acres and stocks report, we had a report come out after the Canadian acres and stocks report as well. We also have a weekly report that comes out on Fridays, or at least the last business day of the week generally. So lots of stuff for you to take in if you do subscribe to our reports. All that I'm giving here is just the YouTube videos. So if you want to get more than that, subscribe again, CanadianAgMarkets.com/subscribe. All right, there was a bit of a surprise today in the U.S. acreage report. Again, behavior of the market was a little bit lower, but rallied back throughout the rest of the day. Soybean acres were estimated at 83.648 million acres, and were reported. They were estimated at 83.6. They were reported at 83.4, a miss of about 269,000 acres, lower than expected. Today's report was also 115 acres below the March estimates. So, not a huge miss by any stretch, but still lower than expectations. And I'll get into stocks in a little bit here. Corn futures also moved lower after the reports. Corn acres were very close to industry estimates at 95.2. That's million acres. However, this was a little lower than the March intentions. This is still a big corn crop, though, and that is pulling on corn values and has been since, I would say, mid-April or so. Spring wheat acres were reported unchanged since March at about 10 million. Actually, that's a little bit lower than what the USDA had reported in March. Nothing really to rattle markets here today. Durham saw a notable increase, however. Durham acres were now called 2.1 million versus 2.01 in March. So this makes all wheat ever so slightly above expectations. Again, wheat did sink as a result of their reports today. So if you want to get the table on the acreage, as well as the, what was reported in March, what was reported in 2024, all of those kinds of things, this is available in our in our ad hoc or our hot takes update that we sent out to our subscribers later today. We did update our fundamental charts today, acreage and things like that. We'll maybe look at what that implications are for production in our next weekly report. But here's all the charts for all the major commodities that we care about here in Canada. Kind of getting on to stocks here. We also touch on this in our report today. Stocks seems to be, the major pull on soybean markets as stocks were reported 37 million bushels above the industry estimates. This has June stocks above the 1 million bushel mark. And that may have been kind of that psychological number that spooked the holders of long positions. Overall, though, this stock report should have been relatively benign. And I think the close of the market kind of signaled that as well. We do put some charts in here. I'm going to get to some of those as well. But maybe for canola, what I will do is I'm going to move over to the big news item that kind of affected canola today. Canada did drop the tech tax to restart the U.S. trade talks. This is an article from the BBC. It's funny that I find the best ones, so not necessarily our U.S. or Canadian news agencies, but the BBC is the first one I saw this on. So Canada's kind of bending the knee a little bit here and will rescind a tax on big U.S. technology firms. This is just hours before the first payments are due to allow trade talks between the two countries to restart. So on Friday, if you recall, U.S. President Trump called off the negotiations over a trade deal, describing the tax as a blatant attack and threatened higher tariffs on imports from Canada. So overall, this is positive for the markets. I think it's positive for trade. I'm never a big supporter of tax anyway, so I'm not super upset about the tax not coming in because eventually it just comes back to us consumers anyway. All right, let's get into some of the charts here today. I'm going to show the November canola chart here. As you could see, it was a bit of a concern on Friday as the market leaked below. It punched well below the 20-day moving average. It leaked below the trend line, and today it moved down to test this 50-day moving average before rebounding. It now closed right at that 20-day moving average. Is that going to be resistance again, and will we see further weakness today, or will it continue higher as it did break above the 20-day, although we have done that a number of times over the last couple of days. As you can see here, the high of today was $7.19. It was up like $25 or $26 at some point today, and petered off as the day kind of went on, or as soybeans kind of got a little bit of pressure added to them as well. But overall, I think this is positive for the canola market. We have been getting rains in a lot of the areas that canola is grown, and I think there was some farmer selling pressure that pulled on that. There's a big long position. Actually, if I kind of let's see if I can put this up really quickly here to kind of show what the spec long position is looking like. We're up at 139,783 contracts. That's of last Tuesday. And as you can see, this is just a massively large long position compared to history. So, it could be subject to technical sell downs, profit taking, risk off, all that kind of thing, particularly if we see, some beneficial rains come in, which may have been what happened here in the latter part of June here. So that's canola. Here's the soybean market today. We did see soybeans down quite a bit today. It did hit a low of 10.22. The high of today was 10.44. So lots of volatility. It was down 20 cents after the report, which looked a little counterintuitive at first. Sure, the stocks were higher than expectations, but the acres were lower. I didn't really think the stocks number was that much of a divergence from the estimate that it warranted a big sell-off like that. But as you can see, we kind of came back to the mean of the day, not necessarily unchanged, but pretty close to unchanged. Corn continued to slip a little bit, but again, corn was much weaker during the day. Didn't post a new low or anything. We did see a low of 405. The recent low here, which was just on Thursday of last week, was 402 and a quarter. So that's, I think this $4 area might offer some psychological support here, but this market has just been weak. Again, if I if I add the commitment of traders here, uh, it shows the size of the short position. So, we're talking long position in canola. Here we got the short position at 175,000 contract short. Now, that is not a record by any stretch. Even as we go back to, a month or as we kind of got into the early parts of July, this got sold down to 350, 355, maybe even more at some points. So overall, there's still a lot of selling pressure that could come into corn from managed money and from speculators and things like that. So this push lower may not be over, but we did see a bit of a bounce over the last couple of days in this market as well. All right, let's show some of the wheat markets. They've really been coming off their highs recently. Maybe I'll start in Chicago. Why does it keep Chicago here? As you can see, I did put a Fibonacci retracement on there. It did blow through that a couple of days ago. It did come and test the 78.6. Not that I put a whole lot of weight in the 78.6% Fibonacci retracement, but it does seem to have found some support there. I think it is likely that we may see it move back to test these previous lows near 521 if this weakness is going to continue. So that's this Chicago. We see a similar thing in Kansas here today as it is broken through some of that trend line resistance. I think we could see a test of this low, which was 515 and a half. When was that low put in? On the 13th of May. So we could see some weakness and a test there. Now, Minneapolis wheat did see a little bit more outsized losses. Well, about in line with Kansas City, I suppose. Here's the September, and I'm just going to go straight to the December. That's the one most of us Canadians are hedging off of right now. As you can see, huge amount of volatility today. It was higher on the day at one point at 660 and fell and is now at 639. So 21 cents of volatility at some point today. And of course, the loss count is done off of the close of yesterday, not of the open of today. So just something to keep in mind. Lots of volatility, a big loss from where the open was today. It did kind of test that 20-day moving average, and before it faltered and fell through the 100-day, fell through all the major moving averages today after testing the 20. As you can see here, which is also concerning, is we're starting to see the 20-day moving average kind of curl around and start to point downward. That's not a good sign either. So a little bit of risk in the wheat markets here in the futures anyway, that I'd keep an eye on in the next little while. We may see this weakness kind of protracted or flush out through the summer as well. Some other markets, soybean oil kind of held on today, nothing major in there. I did kind of want to touch a little bit on what we're seeing in the cattle markets. Now, we did see some weakness in feeder cattle. It's now up 310.65. The high here got to 314, so we're not that far off now. The gains the losses were slow, did move below the 20-day moving average, but have now rallied past this. And as you can kind of see, this pattern is somewhat common here. It even goes back to January. It floated below the 20-day, then rallied to a new high, floated back below the 20-day, rallied to a new high. We're seeing this kind of wave pattern happen here. So it could be that, the cattle fundamentals haven't fixed themselves. So I think we could see another push, at least those old highs near 315, and maybe even higher if this pattern does continue. Fats are kind of doing the same sort of thing. A little bit more work to get it back to those previous highs. This is the August live cattle chart here. We just moved above the 20-day moving average again after floating below. As you can see, it's done that again a couple of times, although through the month of May here, we did see the 20-day act as support. So overall, that's your market update for today. So thank you for joining us. We will be back again on Tuesday. So we're taking tomorrow as well off. It's kind of a choppy time of year. So we'll see you again on Tuesday. Have a great day.